I am continuing my series on credit. And just to recap, I'm using the Ultimate Field Guide, Understanding and Improving Your Credit. And this is actually from, going by memory, I think it was Experian. It was one of the actual 3 credit bureaus. So I'm using their guide. And on my YouTube channel, which this is also recording on YouTube, I've got a link to this 40-page guide in the description as well, so you can actually look at the entire guide if you find it to be useful and you want further information. But this is about my 4th part and final part on this series for credit using this Ultimate Guide. And today I'm going to talk about 6 ways to control your credit. Now, once you understand the factors that influence your credit scores, which you understand those from the other 3 segments I've done, then your choices can help you to improve your credit scores. And what you want to do is aim to do the following. Number 1, and this is really huge, and I tell people this all the time: pay your bills on time every time. What does it mean for a lender, and what does it mean for the credit bureau? There's 2 different definitions of paying on time, okay? When it comes to your bill, you might be paid late as of the 10th day, and you might pay a late charge. But when it comes to the credit and when it comes to mortgage lenders, we view late as more than 30 days. So if you don't pay that bill within 30 days, it rolls to that 31st day, then you're officially late. The mortgage lender views it as a late, and it's gonna show late on your credit report. So that's what they mean by pay your bills on time every time. I can't tell you how many times I see people's credit that didn't realize the impact of this, and they let a $15 bill roll late or a $30 bill roll late. And I mean minimum payments, of course, is what I'm referencing, but they just don't realize the impact. So I'm hoping that with this series that you all really recognize the impact of paying your bills on time. The next thing is pay down your credit card debt. This will help you to improve your credit utilization ratio, and the lower you get it, the better. People with the highest scores keep their utilization levels under 10%. So I'm going to elaborate on that. Your credit utilization, and basically some people say debt ratio, that we're referring to here is based to the credit bureaus. The debt ratio that a lender is going to use to qualify you is not this, so it is different. The other thing I want to elaborate on is this says people with the highest scores keep their utilization under 10%. What I always say is keep everything as far as credit balances at least 30% or less, really 29% or less. That's what they say is always adding points to your score. When you're not having a high utilization, when you don't have your lines of credit or credit cards maxed out, that's where we say the 30%. But this is telling you that the people with the highest credit scores keep their utilization below 10% of what's available. Now here's a note that they've got. Paying off your balance in full each month, I'm going to circle this, not that you can see what I'm circling, but does not negate the impact of utilization. If you have a $5,000 credit limit and run up $1,000 in charges every month, you may show a 20% utilization even though you pay off those charges every month. The credit utilization ratio on your individual cards plays a role too. You can be strategic about this by making larger payments on the card that are nearing their spending limits. So I want to elaborate on this further. One part that they're talking about is if you have cards that are nearing the limits and you want to pay down some cards, you have some money to use, you want to use money toward the higher limit cards first from the perspective of raising your credit. From a financial perspective, the answer to how to do that could be different. From a getting out of debt perspective, the answer to that could be different. I'm talking about here how to improve your credit scores. So if you have that extra money and you're really focusing on improving those credit score numbers, then you're going to have more benefit by paying down some of the credit cards with the balances higher to the limits. Now, I still truly 100% believe that you should charge on your card every month and pay it absolutely in full to avoid any interest. So I don't want this statement here to make people think I'm not going to pay my credit card off in full each month. That's not what they're saying here. If you want to try to isolate more specifically what they're saying, I would say a complete sentence like this. If you know that you're going to be applying for a mortgage soon, then maybe go ahead and don't use your cards for those couple of months, because for those of you who pay off your balances every single month, even if you max out the card, the mortgage lender is going to pull a credit report, which is a snapshot, like a Polaroid picture in time, that generates the balances and therefore generates the score. So if you know you're going to be shopping for a mortgage, maybe don't use those cards for a couple months, because never once in the history of my career have I ever pulled someone's credit where in that exact moment, we caught that moment where it was zero because they're paying it off every single month. We just don't. So it's kind of a timing game. Now, the third thing is get credit for timely utility and cell phone payments. Now, again, this is obviously Experian where I'm getting this information, because I forgot where I was getting it from earlier, but this is talking about the Experian Boost. So Experian Boost is a free service that can help you improve your FICO score based on your Experian credit report by factoring in your history of utility, cell phone, and streaming service payments. To enroll, you connect your bank accounts so that Boost can identify qualifying payments and add them to your Experian credit file. Once that's done, an updated FICO score will be delivered immediately. So I do see some people doing this to help boost their score before applying for a mortgage loan. So I don't think this is necessarily a bad thing, because we don't usually use your utilities or your cell phone bills in your debt ratio when it comes to a home mortgage. Now this could change, because they love to change things every day with mortgage lending. It's always a moving target. But currently, and what it has been for a while, is that when that comes through and you get your boost and these things report in your credit, we omit them. So we're not going to add your cell phone bill. We're not going to add your utility bill, your Peacock or whatever it is, that you're paying for. We're not going to add those in your debt ratio. We're going to omit them, but allow that to boost your score. Now, I appreciate you all tuning in. Please drop some questions in the comment, drop some comments in the comment. I would love to communicate back and forth with y'all. I love, love, love the interaction. So thank you for that. Okay. And number 4, and I get this question a lot, so I'm going to read exactly what they say, and then as always, I will give you my 2 cents. So, keeping unused credit cards open. I'm sorry, I didn't say keeping, it said keep. Keep unused credit cards open. Keeping unused credit cards open, as long as they're not costing you a lot of money in annual fees, is a smart strategy, because the closing of an account may increase your credit utilization ratio, and I'm interjecting this, it may also decrease your time in file, or the length of history of your open active trade lines. If you have an outstanding balance on any credit card, closing an unused card will increase your utilization. Also, keeping an account active by using your card to make small purchases regularly and then pay them off right away can help you increase your scores. So that's their 4th thing of the 6 ways to take control of your credit. Number 5, check fraud or inaccuracies on your credit reports. Incorrect information or fraudulent accounts appearing on your credit reports can drag down your credit scores. You should check your credit reports, all 3 reporting bureaus, which is Experian, Equifax, and TransUnion, for any inaccuracies. Verify the accounts listed on your reports are correct, and if you see something you believe to be an error, submit a dispute to have the information corrected right away. So what is my tip for that? I've been saying this for as many years as I can remember, and I still believe it to be true. Go to annualcreditreport.com, that's annualcreditreport.com, and once a year you can get a free copy of all 3 credit bureaus. It is not with scores. If you want scores, you can pay for them. I don't think you need to pay for the scores unless it's a unique situation. Hey, Jessica. Thanks for tuning in. Unless it's a unique situation. You just want to get the report, because you want to go through that with literally a fine-tooth comb, and you want to correct anything that's wrong. I mean, you want to look at previous addresses, current addresses, you want to look at employment history, and different things like that. You want to look at your name variation. I mean, sometimes we have junior on one thing, not junior on another thing, the second or the third on another thing, and all these things have to match when it comes to mortgages, right? So what you want to do is to make sure that all these things are correct and they match. And so doing that audit once a year through annualcreditreport.com would be great. Sometimes you've got things reporting late that aren't. Sometimes you've got accounts that show open that are closed. Like, there's so many things that could be reporting incorrectly, and you want to fix them. It's your responsibility to double check the bureaus. The other thing that you can do, while I do not like the credit apps that you use, those free things, those free services or whatever, from the credit score perspective, because they use a different grading scale and they don't explain that to the consumers, and it's very different than what a mortgage lender uses. So I don't like them for that part, but what I do like them for is if something pops up or something's wrong or somebody tries to steal your credit, like, those are things that are gonna alert you to that. So I like the credit monitoring apps for that. I still think you need to do the annualcreditreport.com once a year. And I think the second time a year, you need to pull your own credit report. Go ahead and pay Annual Credit Report for that, for those 3 bureaus, and do that sweep again. Twice a year, you can't go wrong. The other thing I suggest, which I am not an affiliate for them, Donna, thank you for being here. Thank you, thank you. The other app that I like, or the other service I like, and I'm not an affiliate for them or anything, but if you want me to be, please call me, LifeLock. So with LifeLock, we've been using them for probably 10 years. I even had it on our daughter when she was young, because yes, I've had stories of family members stealing children's socials and birthdays and like creating accounts for them and stuff. So the things I've been able to see and dealing with people have helped me to know like what to try to do, try to avoid. So I do like LifeLock, because if anything changes or someone pulls your credit, you get an immediate alert, and that can help you remain safe as well. Because it's so difficult when people get their credit stolen or things reported incorrectly. It's really hard to bounce back from, and it's really hard to keep it off, and it's really hard to keep the credit good. I mean, I've seen judgments. I had one client that the same judgment that was released that shouldn't be on a report anymore, we would fix it, like literally fix it, rescore it and fix it, and 3 more times that darn judgment showed up, like those kind of things. Or I've had siblings that have similar names and similar socials because they're born, near each other or whatever, and maybe just similar names and not even similar socials, and things will report on the other person's credit report. So if you want to avoid all of that and protect yourself, annualcreditreport.com, twice a year, pay once, free once, and then use those apps to monitor things. Don't trust the score. And then LifeLock is another thing you can do to protect yourself. All right, number 6 and the final one, but I'm not final because I've got like 8 more pages I want to go through with y'all. This is just part of the topic for today. It's all credit, but part of what I'm going through. So number 6 is apply for new credit only when you really need it. This can help you prevent or at least minimize the slight credit score ding that sometimes accompanies a hard inquiry. Let me focus on those words. A slight credit score ding that sometimes accompanies a hard inquiry. And I say that, and I say it slowly, because so many people are like, I want to get approved for a mortgage, but don't pull my credit. But then they'll go to Target and have Target pull their credit, or they'll go look for an auto loan and have them pull their credit 6 times. Like, a mortgage loan is when you want your credit pulled. And as you can see from Experian directly, it can be sometimes, not always, a slight ding to that hard inquiry. So it's not like your score is going to drop a ton if you have a mortgage lender pull your credit for a pre-approval. But if you have a lot of people pull your credit in a short period for a lot of reasons, then you will see dings and you will see drops. Now, understanding that borrowers tend to shop around for best credit terms that they can get, lending score models treat multiple credit applications placed within a short time as a single event. So 14 to 45 days for the FICO score, that's what this says. So if you're seeking a car loan or a mortgage, for example, it's a good idea to apply to more than one lender in an effort to get the lowest interest rate that you qualify for. So either one or maybe 2. Don't apply to a bunch of places is my suggestion. Your credit score will likely take a temporary hit, but won't be any worse than if you applied with just one lender. And you'll likely have more than one interest rate or fee structure to choose from. So that part was the top 6 ways to take control of your credit. And now they're going to talk about check your credit report regularly. So let's go through what they say and see how it kind of compares to what I say. So it's a good idea to review your credit report from each credit bureaus at least once a year, if not more frequently. Yes, I just said a definite twice a year, plus LifeLock and maybe even a credit app, because credit affects your cell phone if you need one. How simple is that? It affects your utilities. It affects your mortgage loan, your car loan. It affects your home insurance and your auto insurance. Like, you have got to protect your credit like it is gold and it can't be replaced. You got to be super, super careful with that. It's wise to check your credit report at least 3 to 6 months before you seek a large loan, such as a mortgage, auto loan, or private student loan, because this can help prevent unpleasant surprises when it's time to apply. But you know what else can help prevent unpleasant surprises when it's time to apply? Annual credit report twice a year, LifeLock, and the credit apps to monitor what's going on with your credit. Because it's so frequently that as mortgage lenders, we're like, oh, did you know you have this medical collection? And at least 70% of the time, no, they had absolutely no idea. So those are fun conversations. This says you can get your free credit report directly from Experian. In addition, you can get one from all 3 bureaus every 12 months through annualcreditreport.com. Let's see. You can also get a free report if you've recently been turned down for credit, employment, or insurance for credit-related reasons. So I did not mention that earlier, so I'm glad they mentioned that here. The company that turned you down should provide the contact information for the credit bureau they used for your file and for the decision. For mortgage loans, we use all 3 bureaus, but not everybody for every reason uses all 3. They might just use 1 or 2. So you need to know what was used for the decision that affected you being denied in that example. Once you're denied, you can contact the bureau within 60 days to obtain a free copy of your report. And that's the bureau in question. So if it's all 3, then you can contact all 3 within 60 days and get a free copy of that report. Now, they're going to talk to you a little bit about what you want to look for. So make sure your personal information is accurate. Missing employment information from a previous job, from an example, an address you don't recognize could be a sign of identity theft, or, you know, sometimes I'll see people's addresses for like their mom's house they haven't lived at with their mom, like they never lived there. So those are things you want to get taken off. Be sure you recognize all the accounts listed on your report. If you see any loan or credit cards or anything, get in touch with the lender immediately if those are not you. Now, do keep in mind that the retail credit cards sometimes show up differently. So I'll just give examples, not explicit examples. They're just made up examples. But like a Target card might show up as a Community Bank, or a Steinmart might show up as a Visa. Like, they'll sometimes show up as different things. Like Rooms to Go a lot of times doesn't say Rooms to Go. It'll say this other thing. So you need to make sure, like, sometimes these really are your accounts. So you want to double check on that. Make sure your credit accounts show the correct amount owed and the correct status, meaning, is your balance really your balance? Are you really late? Are you really on time? Like, make sure those things are accurate as well. Because again, your credit is your responsibility and you want to double check everybody. Don't trust that people are reporting stuff correctly. All right, the right way to track your credit score. Now, I'm interested to see what they have to say and how much I agree or disagree with it. But the right way to track your credit score. Once you're confident that your credit reports are in order, you can begin tracking the efforts your smart credit behaviors have on your credit scores. You can get your FICO 8 and additional scores lenders commonly use to assess your credit worthiness directly from Experian. Now, yes, some lenders, there are different models of the FICO. They're referencing the 8. Some lenders are using later models than the 8, than the 8th, yes. But there are actually hundreds of credit reporting models, so keep that in mind too. And then, so I'm glad they say a FICO, I'm glad they say the 8, they're telling us exactly what they're giving. A Vantage score are available for free through several banks, credit card providers, and personal finance companies. A Vantage score is what I'm talking about with those free apps, is they're usually giving you a Vantage score. That is totally different grading scale than a FICO score, and a Vantage score has nothing to do with your mortgage or your mortgage approval. It's not even looked at that way. We don't even get that score. Like, it's totally separate and apart, which is why I get aggravated and I don't like that they give consumers Vantage scores. If you're gonna give somebody a score, why do I care about my score? Because I wanna know how good it is, and I wanna know what kind of loans I might qualify for, and if I'm gonna qualify for the best rate or not. So if that is based on a FICO, why are you giving me a Vantage score? So if any of you guys are watching, you know who you are with these free credit apps that I'm not gonna mention. Why don't you tighten up a little bit and make that a little better, because you got some room for improvement there as far as I'm concerned. So the various credit score models all consider your credit factors at least slightly differently, and none of them are guaranteed to be identical to the score a lender will see when they consider your application for credit. I'm going to read that again. The various credit scoring models all consider your credit factors at least slightly differently, and none of them are guaranteed to be identical to the score a lender will see when it considers your application for credit. But all of these scores will tend to increase as you adopt the smart credit behaviors outlined in this really great guidebook. You can use all of them or some of them, and you want to keep track, like mark your progress. It's really exciting. You want to work toward better credit scores. Like, having excellent credit really opens up a ton of doors for you. Here are some guidelines for doing so, or tracking your credit score and tracking your progress. Be consistent about using the same score comparison for purposes month to month. You can't meaningfully compare last month's FICO score to this month's Vantage score as an example. I love that tip. Don't worry if your score fluctuates from time to time. This is normal and usually the result of changing account balances, applications for new credit, or outdated information being removed. That's important because remember I said when us as mortgage lenders pull your credit report, it's a Polaroid of the balances generating the score at that particular time. So if you're looking at, even if you're looking at a credit app that's giving you a version of a FICO that a mortgage lender uses, which I don't know one that exists, but let's just say that you were, and even they gave you your score on Monday and then a lender pulled your score 10 days later, well, it might be a different score because a balance updated, a balance, decreased, increased, or whatever. Keep your eye on long-term trends. Don't obsess over your credit score by checking it several times a week. Many score reporting tools only update once a month, and checking more frequently is not necessarily productive. Instead, focus on sticking to good credit habits, and once you've made them second nature, your score should rise in time. Now, what to do if your score is low, and this is important. I might even cut this section out for a whole nother video about what to do if your score is low, because a lot of people are searching for information on this. So let's talk about it. If you're working to build on a poor credit score, if you're working to build on a poor credit score, there you go. For example, a FICO score of a 579 or lower. That's the example for this. Now, I find that the average credit score moves. It tends to run between 680 and 700, so keep that in mind. So they're referencing a 579 or lower, but if you're below 700 or below 680, you're already likely below average. And when you get down to in the fives, you have bad credit. So I would suggest poor credit is not as low as a 579. It's actually a higher score. That's still poor credit. But anyway, let's continue. So if you're 579 or lower, there's a good chance your credit report contains some serious negative entries such as a foreclosure, a bankruptcy, collections. You may also be swamped in debt and unable to make all of your monthly payments. Hey Jerry, thanks for stopping in. Be sure to leave me a comment or a question. If that sounds familiar, don't lose hope. You have options that can help you get your credit moving in the right direction. So the first thing they say is consult a certified credit counselor. Consider meeting with a credit counselor at a nonprofit certified credit counseling agency. Counselors are trained to help people in your situation and can help you work out a game plan for improving your credit. And the second piece of advice is consider a debt management plan. If you're having trouble repaying your loans and credit cards, a debt management plan could bring some relief. This process involves working with a nonprofit credit counseling agency to devise a manageable repayment schedule that will hopefully enable you to get your finances in order. A DMP can indirectly lower your credit scores, but they can rebound more quickly than they would from like a bankruptcy instead, as an example. So let me put in my 2 cents on these two things. A certified credit counselor. Over the years, I have definitely tried to find them because when I can't help somebody, I want to say, I can't help you, but call this person, call that person, so on and so forth. I would like to believe that they exist out there, but I personally, and I would love to hear from you, have not found a certified credit counselor that I would entrust, that I would put my name on the line, because I feel like my word is everything. And if I refer you, like, that's because you do what I would do and you treat people how I would treat people, and you see things to the end like I would do that, and you do what you say you're going to do, and so on and so forth. I have not found a certified credit counselor or company that does that. I am all ears because I really want to help people. The debt management plan, of course, they're saying like it could help you rebound more quickly than like a bankruptcy. What they're meaning is, what my experience from talking to customers, I haven't experienced this personally, but from talking to customers, is that these companies for the debt management plan is they say, first of all, stop paying all your bills. Stop paying everything. And let everything start to go into default, because that's the only way that they're going to talk to you and negotiate a lower payment, a lower interest rate, and things like that. So the companies kind of come in and they say, let's look at all this, pay it all late, let me go negotiate for you, and now you're going to pay me this one payment, and I'm going to pay to each of these companies. And one of the things I've seen, and please correct me if I'm wrong, but when you're paying the money to the management company and not to these creditors, well, until you catch up on all that, all of those show late and late and late and late and late, right? You seeing that? So, hey Colin, hey Madeline, hey Eder, thanks y'all all so much for tuning in. So keep that in mind, right? It's gonna be a big step back before a step forward. So if you can figure out some other kind of consolidation or some other way to consolidate your debt without having to go through a debt management plan, that could be a little better, but there's a place for everything, right? So no matter your starting point, take control of your credit habits and bring steady credit score improvements. If your score is already good, you may be able to make it great in a span of several months by following these things. If your score is very low, the trek to an outstanding score may take some time, but in this next chapter, we're going to look at why it's worth it either way. So that's really cool. All right. Now they have a myth and a truth. So credit repair services can raise scores quickly. Truth. That's the myth. Credit repair services can raise scores quickly. That is the myth. The truth is, there are no quick fixes for credit scores. When people feel the need to turn things around in terms of their credit, they often want immediate results. But while recovery is on the table, no matter how your credit score or what your credit score, the process requires patience as well as discipline. When building up credit scores, you'll need to think about the changes you can make over the course of months or even years if a bankruptcy or foreclosure, as an example, is in your credit history. But there's no quick solutions. If a credit repair organization offers to help you fix your credit report for free, be very, very careful. So-called credit repair companies typically charge fees that you could put to better use paying your debts. They often advise you to stop paying your bills, exactly what I just said, and instead put the money in an account they control and they charge you to maintain. Exactly what I just said, but I didn't even realize they also charge you to maintain it. I guess I should have realized that. This fund essentially provides money to their repair company that will offer your creditors as settlement for your debts. but creditors are under no obligation to accept such settlements. And your credit report can be severely damaged if you stop making payments on your debts. Even if all the payments are made on time, a settled account is considered negative because a full debt amount was not repaid as agreed. Credit repair companies can't do anything for you that you cannot do for yourself for free. I'm going to take a sip of water and I'm going to say that again because it's what I tell people all the time. If you can pull your credit report for free once a year and pay maybe, I don't know, 35, 40 bucks the second time. So you can spend 40 bucks a year, get your credit report twice a year. Why do you need to pay a company to do that? If you want to dispute that something's wrong on your credit, that's also free for you to do. If you're doing it online, you can literally press a button that says dispute this account and then say, I never lived at this address. That is a relative's house. Dispute this account. I did not pay that bill late. I have proof that I didn't. Different things like that. You know, I didn't work at this company, or I no longer work at that company. Now I work at this company. Whatever those corrections are, it's all things that you can do yourself for free. If you feel like you need assistance navigating the credit rebuilding process, steer clear of credit repair companies and instead look for a nonprofit certified credit counselor. I love that advice. The National Foundation for Credit Counseling can help you find assistance in your area. Look, our question is answered. Credit counselors can help you work out credit rebuilding plan that works for you without further depleting your bank account. So how exciting is that? I love that it's nonprofit. I love that they're a counselor. I love that they're not making money off of you. They're genuinely trying to help you build and repair that credit. Even if you go that route, you still have to do the work. You still have to provide the letters they want. You still have to provide the dispute information that's needed for them to do the disputes for you. You still have to provide the money to pay the accounts down or settle the balances or settle the collections. So it's not free, but it's really, really good information. I like that much better than these credit repair companies. All right, so we are on to the last few sections here. And this next one is 7 awesome benefits of a great credit score. And like I mentioned earlier, your utilities are based on this, your cell phone bill is based on this, your interest rates are based on this, so much, your insurance rates are based on this. So 7 awesome benefits of a great credit score. Access to a wide range of loan products. With higher credit scores, you'll have more offers on the table, which is awesome. Now, let's say all your hard work, discipline, and patience pays off. Having a FICO score in the upper 700s, which is very good, or the exceptional range, which is 800 or higher, can help save you money over time and make you qualify for more things, such as, number 1, the wider array of loan products. Number 2, higher borrowing limits. Achieving an outstanding credit score and adopting healthy credit habits tells lender you're a reliable user of credit. You can expect new credit card offers to include generous spending limits, and you should also feel comfortable asking lenders you already work with to increase your limits when necessary. Doing so makes larger purchases possible, of course, but it can also reduce your credit utilization, helping your scores even more as long as you continue to maintain those low balances. Number 3, lower interest rates. If you have an outstanding credit score, you're more likely to qualify for the lowest and the best interest rates. As an example, just 1 or 2 percentage points less on your mortgage interest rate could save you tens of thousands of dollars on your mortgage cost over the years. Hey Jenna, thanks for tuning in. Number 4, the most rewarding credit cards. If you have great credit, you're going to get more offers, remember? And excellent credit will help you qualify for credit cards with low interest rates and other rewards, including cashback offers, travel points, and other types of incentives. We talked about insurance. Number 5, insurance discounts. Car insurance companies in many states factor in credit scores when determining monthly premiums. You generally can't be denied based on solely your credit scores, but good credit scores can help you qualify for lower insurance premiums. This talks about car, but I've also experienced this for clients on home insurance as well. Number 6 is more housing options. Landlords may use credit scores to screen tenants and gauge their financial risk. A good credit score can increase your chances of getting into a house or an apartment and spare you from saving and having to pay a higher security deposit. And in this market right now, where the inventory is so low on homes to buy, but also homes to rent, some of these rentals are getting 10, 20, 30 applicants. So if you have stronger scores, you are going to go to the top of that list of those that they're considering. So it's even going to help you on renting. Number 7, reduced security deposits on utilities. If you're a new customer, utility companies may look at your credit report to get a sense of how likely you are to pay those utility bills on time. Having good payment history and good credit scores will reduce the chances they'll charge you a security deposit when you establish utility service. And less deposits is really more money in your pocket. So that's another really great thing. Now, how to get a top credit score. And they've got a picture on here of an 850. I can't even remember or add like how many thousands and thousands of credit reports that I have pulled. But I tell you, I can remember how many times I've pulled over 800 and it's not even 50. It's probably not even 25 out of thousands and thousands. So it is possible, it is doable, but it's not real common. So shooting for that is really awesome because it opens up just a ton of doors. Now, how to get a top credit score. Once you feel that you've been boosting your credit score, you may find yourself drawn to achieving the ultimate credit score or the perfect score, which is at 850, which I've never seen, by the way, not even once, but it's okay. It can be done. But before you embark on that quest, you should know there's not much practical advantage to doing that. If you consistently maintain a FICO score of 800 or greater, lenders will view your credit as excellent and you'll be able to take full advantage of the 7 benefits mentioned previously of the benefits of having a great credit score. So even if you're not shooting, why not shoot for perfect and just land above 800? It's still going to be so amazingly awesome. What you can do to get that top credit score is minimize outstanding balances. While experts agree that keeping your revolving account balances below 30% of your total borrowing limit, the lower the better. Those with exceptional credit scores typically keep balances below 10% of their overall spending limits, and they pay their balances in full every single month. The second thing they do is they send payments in before they're due. The 30-day grace period for payments on most credit cards means you pay no interest charges as long as you pay the full amount that appears on your statement each month. That said, you can pay off outstanding balances before they even appear on your statements, and this can help your score. Just ask your card users or check the fine print in your cardholder agreements to find the monthly statement closing date for each card, and plan on making the payment in full by that date. Doing so gives you the benefit of activity on the card, but prevents even a temporary debt from being noted on your credit report. The next tip is to keep all your credit card accounts active. All other factors being equal, credit scoring models respond more favorably to active credit card accounts, those that are in use, than to identical accounts that lie dormant. This factor doesn't play a big role in the scores for most credit users to worry about, but it can be a difference maker on the edges. Another great tip, set up automatic payments. This is a great way to make sure your bills are never late, set it and forget it kind of thing. Of course, make sure you have the money in your account for that to clear. But this is just another trick that a lot of people use that are well over 800. That way nothing gets missed. Now, it won't happen overnight, but improved credit habits and some strategic adjustments to your outstanding balances and utilization rate, you can begin to see steady score improvements in just a few months. With perseverance and patience, an excellent FICO score can be yours. So enjoy the journey. And we've got another myth for you. Closing unused credit card accounts boost your credit score. I'm going to say that myth again. Closing unsecured credit card accounts boost your credit score. The truth. Eliminating an account reduces your total borrowing limit that could therefore increase your total utilization ratio, which could lower your credit score. If you use one of your credit cards less frequently than the others, you may wonder if you should close the account. Keeping the account open and using the card for a small purchase like a subscription and then pay it off each month can actually help your scores. So unless you're paying annual fees on the card you're not using, although it's super compelling, it's better to go ahead and leave that account open. If you do still want to close dormant accounts, just know that doing so could reduce your total borrowing limit and increase your utilization and therefore potentially lower your credit score. You may be able to close accounts with low borrowing limits without jeopardizing your credit, but generally it is best not to close cards prior to applying for a large loan, such as a mortgage, as your credit scores could be affected. Now here's a myth inside of a myth. It's widely and incorrectly believed that closing your oldest credit accounts can hurt your credit score by erasing part of your history. That's actually not the case. Like a paid off car loan or a paid off mortgage. Credit cards accounts closed in good standing stay in your credit report for 10 years after they closed, and the age of those accounts continue to benefit your score as far as time in account. But as I said previously, open active accounts are a little bit differently, like how long open active as well. And that's really it. The takeaways are just kind of enjoy the adventure, shoot for that 850, make sure to stay on top of your credit, look at your credit, view your credit, make sure no one's stealing your credit. I'm going to say this and it's going to make a lot of people cringe, but don't co-sign loans for people. And I say that because yes, we do it co-signers all the time. And what people don't realize is if the person you're co-signing for doesn't make that payment or they make that payment late, it affects your credit as well. So be very guarded with your credit, the usage, the utilization, the accuracies in the report, putting your name and signing your credit for other people who may or may not be as diligent or responsible as you. So keep those things in mind. And that wraps up my credit series. I hope you've enjoyed. Thank you so much. And go ahead, leave me some more comments and questions. I would love to answer them. Have a wonderful day. Thanks for tuning in. If I can help you with anything, please give us a call at 985-300-LOAN. The Weeks team would love to help you. And if you haven't liked or subscribed to the YouTube channel, please do. And also, please share this with your friends and your family and share it into different Facebook groups. It's so important that we get this information out there because so many people are denied home loans, and it's not because they don't approve, it's because of lack of information, accurate information, it's miscommunication, it's frustration of the process, and step one of that is your credit. So get control of that and do all that you can, and it's gonna put you in the best place forward. And please help our young people. We also have YouTube credit hacks, $0 to perfect credit history coming soon. So keep an eye out for that. And I look forward to seeing you in the next one.